The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 89. NASDAQ is off 24. S&Ps are off 6.5. Gold contracts down $12.20 at $12.56. We have silver down 29 cents at $17.40. Oil over the swing point, up 56 cents, $50.39. 10-year note down 5 ticks, 30-year bond off 18. Good old King dollar also over its swing point, up 366 ticks, 96.45. The euro's trading at $1.11, and the yen is out here trading at 103.90. I'm just hitting the 104 mark. Just give it a day, man.
Pretty amazing, right? The only thing that's positive on there, it looks like, is oil, Apple,
and the yen. The yen,
and the dollar.
Exactly. Yeah. Pretty amazing. There's no doubt. And bottom line, folks, is that this setup for this jobs number tomorrow. It couldn't handle highs yesterday, but guess what? I don't think there's going to be a lot of selling out here today, and I think it's going to run up there again. And we'll have a better understanding at 1 or 2 this afternoon, meaning what type of volume that we have on this pullback. Because every time that it has been pulling back since September 9th, bottom line is that there's no sellers. There's not enough sellers to go lower with conviction.
Sure.
Let's go over to our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. And don't forget, folks, if you haven't test drove the Thinkorswim platform, you can do it right now. You hit the banner on our website, bring up the platform. They're not going to. You can do as much paper money as you want inside that platform. And then you got to remember, every trading day, right here, 12 to 1 Eastern Standard Time, Kevin Scott, they have a great show, Swim Lessons. If you want to understand options upside down, great time to do it. This is going to be particularly a great time because we have earnings that start next week. They're going to be putting on lots of trades.
Jobs number tomorrow, right?
Jobs, oh man, I'm telling you. And today, the job, meaning the amount of people that applied for unemployment is the lowest in like 20 years or something.
Yep.
It's an outrageous number. Kevin Hinks, what's going on?
Good morning, the O'Brien family. How's everything going there?
Good morning, Kevin.
You guys staying dry?
Yeah. Oh, we're lucky, and we're on the West Coast, folks. So,
Right.
it's the East Coast that is, this could be some
I was watching
real...
it all morning because, just even living on this coast, you can't help but just be in awe of, like, man, it's pretty intense. It is.
And is it coming right in there?
Yeah, it looks like it's even going to, from the last, 12 hours, a little bit further west. So instead of going a little bit further north, it's going to come into, maybe West Palm, or it's going to be...
West Palm Beach is what I'm hearing. That's what I heard this morning.
That's not good.
So it's going to be intense. People should really, if you're in danger, right, get out of there, man. This is a big one.
Don't mess with Mother Nature.
From people that have gotten trapped in, New Orleans for Katrina, let me tell you, man, we thought, worst case scenario, we were going to be in New Orleans for a couple days while everything got back up. And guess what? Worst case scenario, casinos never close, right? So maybe we go play a little bit of poker for a day. And that was my mentality. And, things escalate quickly, to not, all joking aside, right? But seriously, we were like, okay, worst case, we're there for an extra day. We always work hard. We'll take an extra day and maybe explore New Orleans, and things go quickly. So,
Kevin, you're going to love this if you didn't know it, right? Okay, so picture this. And this is great for traders anyway, folks, okay? So one of our clients, it was...
Odyssey Marine.
It was Odyssey Marine Day in New Orleans, Kevin.
They're a public company that does treasure hunting, basically. And so they were opening up a museum and all this thing in New Orleans. That weekend, they were opening it.
So needless to say, but anyway, we couldn't get out. But guess what? We closed the casino that night, and literally.
And thank God we did okay, because we had cash that we needed in the form of more than you might have usually. And thank God, man.
God.
So man, stay safe and things go. Just don't. It gets worse than you can imagine.
Just make sure you close the casinos if the Hurricane Katrina.
Everything can be closed. So get out of there, man. Intense. I know.
Oh, man.
Okay, back to the markets.
Big day tomorrow, guys.
Yes.
With this unemployment number and non-farm payrolls. So I think, Tom, what you said at the beginning of your show there is exactly right.
Yeah.
Volume will taper off the whippiness of the market, the moves will taper off. It's all about tomorrow and the jobs number now. Unless, of course, you're trading Twitter or some of the other names. Besides that, it's all about the jobs number tomorrow.
No, you can see it. There's no doubt. Yeah, and Kevin's talking about Twitter, folks. They took Twitter apart. They ran it up in 5 days.
So much for the hype.
From 18 to 25, and then it just gapped down to $4.36. That's why you want to be in the option market, right, Kevin? Defined risk.
I read in. Yeah, that's why. No better reason than to define your risk. Right?
That's a shocking move to me. I mean, that
is.
I expected, we've been talking about it. They are a commodity for sure. So
I'll tell you what, Tommy, not only is it a shocking move, but reading the news on it, it's all unnamed sources and nothing is confirmed in this article that I read. At least I'm trying to look for anyone on the record. No one's on the record.
For being such a substantial move.
Yeah,
I agree.
It's wild, and our first talk host, John Logan, right? It was great. He was saying, man, he says, you talk about, it seems like collusion that all of a sudden all the suitors at one time didn't want Twitter. It's like, oh, really?
Yeah.
Right. And oh, by the way, one article has inside information from 2 major companies? I don't think so.
Right.
You have to love it. Folks, right here, 12 to noon, 12 to 1 Eastern Standard Time, right on your cell phone, TFNN.com, hit Tiger TV. Kevin, you have a great one, safe one, and we look forward to the show.
Stay dry, guys.
Thanks, Kevin.
Day.
Stay right there, folks. Tommy and I come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 80. You get the Nasdaq off 24. S&Ps are off 6. And guess what?
What do we got going on?
We get natural gas, man.
It's almost 10:30.
It's natural gas day. And if you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You see the banner on the top of the side. You can test drive the Nadex platform.
Get yourself a demo account, right?
Yep, exactly. And you know, the way the whole market, man. I mean, this range that we're in is just crazy. I mean, you know.
So what were you saying to me before? You really like these double leg trades.
I do.
Yeah,
I do.
Especially because I think part of the thing that's so attractive to you, right, is that you're used to trading where everything you're risking is completely risk capital.
Right.
And when you're risking 1 to make 4, you're going to have a lot of trades where it's like lose it all, lose it all. Lose it all,
make 4, make 8,
400% on one trade, right? You know, and then guess what? You know, you get a couple winners in a row that really offsets from when you lose like 5 in a row.
That's right.
But and that doesn't happen with these. That's
and that you can go. I can go a couple weeks and go lose, and then and this is what's wild about that, folks.
Go ahead, yeah.
And then you go win. So it's not as smooth as you like sometimes.
No, and that's where you know I've written some stuff for Nadex talking about the when you talk about the probabilities of like streaks, right? And really so people have the tendency to say, let's say you get in at 25 on a binary.
Right.
You say to yourself, I'm going to win 1 out of 4 times.
Right.
You have a 25% probability. That's all correct.
Right.
But instinctively you say, okay, I'm going to win then literally 1 out of every 4 times.
Yeah,
and it's like, no. That's not how it works at all.
I know.
Because then you start looking of what's the probability that I lose like 5 in a row.
Yeah.
And it's a lot higher
good.
than you think.
It's good.
Yeah. And so then when you go, what's the probability I lose all 8 in a row, right? And guess what? The probability of you losing is 75%.
Right.
So all it's saying is, what is the probability that I lose a 75% probability, event?
Yeah.
5, 6, 7, 8 times in a row. Just in your mind, you should be able to process, well, geez, that might happen. 75% is a big percentage. If you're on the other side of that, and you have a 75% chance of probability of winning, you think you get hosed when you lose.
Right.
You know?
Right.
So keep that in perspective, because those streaks, we'll find an article and I'll talk about it, because I like thinking about that, because
it's important.
when you deal in these types of risk-reward scenarios, you need to keep that in perspective.
You do.
Because 25%, you're going to lose like 10 times in a row. If you're trading these all the time,
I have
a lot. Right.
No, I have. I have. And
everybody is. That's my point.
And on the other side, like when you win for like a week and a half, that makes 0 cents either. And when that happens,
really
folks,
right.
Whip the money right out of it. That's what I do.
Because you have to know, for every time that, a 25% chance probability comes in like 3 times in a row,
right.
That's a really low likelihood of event. That's only going to happen like 1 out of 100 times, 1 out of 50 times, but you're trading a lot. So then you see it enough.
Right.
Okay, so here we go. Natural gas. We're almost ready at about $3, 303.
Okay.
It's 10:21. We got about 8.5 minutes until the news. The inventory number's at 10:30 Eastern. And let's see. We'll talk about. I know you have a gold trade on that's back here, but let's look at the spreads. Okay, here's the 11 a.m. spreads. And so it looks like we have a pretty good setup for what we like to do usually, as in we're going to have one with 305 being the floor and the ceiling.
305. Okay.
So in the case that the one we're going to be selling with 305 at the ceiling, we're going to pay a little bit more because there's going to be $20 of value in this already.
Okay.
So we'll be selling this one, right? 305 is the ceiling.
Yeah.
We'll sell it at the bid. So so there's about 18 cents right now in intrinsic value in there, and like 7 cents of premium you're paying because you're selling it at 3.025, market's at 3.033.
Yeah.
Then you're going to be buying the one, which is going to be cheaper, I believe. Wait, what did I just do? No, that's the same one. Sorry. Here's 305 with the floor.
Okay.
Up to 325, right? You have 20 cents of movement in each of these.
Okay.
And you're going to be buying this, right? So that's where you're really, that's a really low.
Look at that.
And that's because, though, you're getting in at 3.058, which is 2.8 pennies above market. 28 ticks almost, to put it in perspective. But that's nice where the two legs combined, you're looking at $34, $33.
Okay, so let me go UNG first and see. I'm just curious as to what.
And you could argue that this trade is a little bit better if you might even be like a little bit more bearish because you have value towards the downside already.
Okay.
Whereas to the upside, you can get a 20-cent pop to the upside, and that's actually like your max loss position because it's at 305 is your max loss.
Yeah, and see, what's interesting here is that it would be. Where is that? Oh, that was a spike down. That was up. Okay, let's just put it on.
Okay.
What we have, what we're dealing with here also is the aspect of that storm coming in. Now, it shouldn't affect the gas because gas, folks, is in the Gulf, which is on the eastern board of.
It's in the Gulf, not in the Atlantic.
Yeah,
Right. Yes,
But what does happen, of course, is that perception and what will happen when this number comes out is different.
That's
storms
true.
in general.
No, I agree.
You know what I
Right.
mean?
No, it's a good point. I hadn't even thought of it, and it's definitely a good point to keep. I mean, you got to keep anytime you have a storm ripping across the country, right?
Yeah.
People can just get worried that maybe another storm pops up, and
Oh,
then,
yeah.
and then they're
Well,
kind of rattled from this storm.
This storm in particular, they said that they think on Palm Beach it will double back.
Yeah, no, I know
that's crazy.
Now again, keeping it in perspective, this is only a half hour by
Yeah,
spread,
no,
so
yeah,
so it's
right.
not. But you know what? Every bias in your direction
Yeah.
matters for sure.
Right.
Okay, so let's look at it again. Right, 305 is the floor we're buying.
Yeah.
What we're gonna do two
Yeah,
contracts,
yeah.
and then we're selling.
Okay.
Okay, and here are our two contracts. So do you want to take a look at gold since
Yeah.
we have this up there and just kind of
So-
talk about what looks like at about 907. I'm not sure. Whoops. Do you want to look at Bloomberg or this guy?
Yeah, so in the gold, we'll see. Right now, I'm in a losing position on this, but what I'm looking at is this. Okay, so gold, longer term, 1202, folks. That's where it wants to go to. What I'm trading off of, though, is I'm trading off of this swing point at 1259.10. So
And you were going bullish, looking for
I
amounts,
did,
right?
I
Just
did.
to put-
Yeah, I did. And I got it up here, so I'm like a $4 or $5 out of the money, actually.
Yeah,
And
I
that's-
think even a little further. Go ahead.
And that's what's nice about Nadex. That's the
Yeah.
bottom line. Do you know what I mean?
I think it was at about 9 o'clock even.
It was.
So it might
It's
even
up
be a
here
little,
somewhere.
might even be a little lower than that, but
Lower.
that's like 8:30 there, right
Oh,
there.
okay, yeah. So I
It's
think
like it's
I
somewhere in
sold
that
it like
bar.
12.59. I sold it right when it was coming into that
Yeah.
the swing point.
Yeah.
And then see the other side of this. This is what was also happening is that this dollar is going to be interesting, man. 'Cause, I mean, and it's like it's holding price right now, but that volume is not enough on it right now. But if it holds price, it holds price. That's the
Quite a
bottom
trend,
line.
quite a
yeah,
trend.
exactly. So we'll see where it shakes out. I think the energy is out of that. What I can't figure out just yet is that why it would bounce. That's the thing that's kind of it's like okay, and this is where you just I'm strictly trading off of that swing point.
Yeah.
Because it's like even when I think about it, it's like well, why would it bounce?
Yeah. No, for sure.
We'll find out. You stay right there, folks. Tommy and I are going to be coming right
right.
back.
We're getting
gonna
a little action ahead of time.
We're going to be coming back in with those natural gas numbers. Right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Let's see. So natural gas, we're at $2.98. We just went from $3.03 to $2.98, right?
We did. So we were going over it, right? The focal point of the trade is 305.
Yeah.
And so you want to figure out how much movement do you need to cover your break even in this trade, right? So let's just go back to the position. So on the short side, we got in at 3.022, which is 28 ticks away from 3.05. So this one was the one where we had a decent amount of value in there because it was trading at 303. So that side, it was $28 per contract. And then on the plus side, because we were completely out of the money, we were trading at 3.3 with 20 ticks out of the money.
Right.
So 3.057. It's only $77 per contract. So 28 plus 7, 35. You even add $2 because it's 90 cents on each side. You're looking at 37. And then guess what? You even add in to count everything to make sure if you want to count it all, one execution on the way out, right? So you're looking at $38 you need back per trade, so that's per both sides.
Okay.
And that's 3.8 pennies you got to go away from your focal point. Okay, so you can call it 4 pennies to get a couple bucks in profit.
Okay.
And you got to go 4 pennies away from 305. So you're looking anywhere from 301 to 309. Outside of that area, you start gaining profit. So that's a good move right now. You know, anywhere below 301 and your short side trade, is going to expire for more than $40, which you'll have profit. So right now, you're looking at $25 profit on a $38 trade.
Right.
Yeah.
Right.
And you have 28 minutes left. We'll see what happens. You don't want it to creep back up. You want the trend to continue one way or the other.
No, there's no doubt. There's no doubt. Okay, so now let's take a look at what they have to say.
That'd be nice, wouldn't it?
Yeah. So U.S. natural gas supplies gained 2.1% in Bloomberg. Oh, that's Bloomberg survey.
Just they rose 80 billion cubic feet last week, so
Okay.
we'll see where the estimate is, but that's a rise for sure. I'm just trying to see if maybe the median estimate. No, it's not included anywhere. I'm sure it'll come across our news feed as we continue.
Yeah, we go over and take a look at the UNG. So UNG is down 11 cents right now. And that has some juice on the way down. So CRB, let me just pull this contract back up too. Natural gas, there she is. Yeah, and this is the delayed contract. Okay, so it's interesting. It's yesterday it took off from right there, which is the 298.
That's the high. Yeah, that where you
Yeah,
were
the
just
high
looking.
of
Yeah.
yesterday. 877-927-6648. Right now we have the.
Sorry.
That's
Go
all right.
for it.
We have the Dow off 93, Nasdaq's off 24, S&Ps are off, 7.5. Inside the Dow Industrials, we have the strength is Home Depot, that's up 1%. Disney's up 0.8. Look at that. American Express is getting smacked. It's down 3%. You get Walmart off 2.7. Merck is down 1%. American Express. Let's see what's going on with American Express. It's down 2%. That has some juice underneath it. It's not that there's not a lot of news out in it, but inside the NDX 100, what do we have? The strength is Dollar Tree. That's up 3%. That was the weakness yesterday.
Yeah.
Lam Research is up 2%. Ultra Salon is up 1.9%. And Tractor Supply is up 1.5%. Taken away from it, Tesla is down 3%. INCY is off 2.9%. JD.com. Let's go over and take a look at the IBB. So the IBB is going south again. It's down $6. It's coming into a swing point with 2.1 million. You do 350,000. It's going to be interesting watching this whole thing shake out.
There we go. So the estimate was 73 billion cubic feet, so there's about 7 billion cubic feet extra.
Okay.
Yeah.
Okay.
So that's especially why it's declined since then. So I know that you're probably just going to let this ride out, right, at this point, in terms of the downside, everything you went over. But let's just say, just to go over the hypotheticals, let's just say that maybe you thought you were trading for like the huge bounce afterwards.
Both
or you
ways,
thought
yes,
that no matter
right.
what way it moved first, you know, that this thing was just going to oscillate in a big way
Right.
after the news. So one option you have right now, of course, the spread to the upside has no active market because
Right.
it's now 6-7 pennies completely out. If this
Sure.
starts climbing back up, it'll get a market. All the value is to your position to the downside, right?
Yep.
So if you wanted to buy back your downside per contract,
Right.
you have $61, and that's because it's about 6 pennies away.
Right.
So you could lock in your $61, which you put up 38, right?
Yes.
That's it. Even 39.
35.
Nope, 38.
28 and 7. I thought.
Yeah, but we went over all the commissions.
Okay. Yeah.
right?
Perfect.
We did.
Yeah,
38.
38.
Because
All
guess
in.
what? That's
All
$3 in
That's-
commissions.
yeah, that's right.
That works out when
Yeah.
you're talking about a $35 investment, almost
Right.
8% of your value. So,
Right.
So $38 is all you need. You get back your $60, you're $22 in profit, and then you have your 2 contracts still to the upside.
Right.
And if this just happens to oscillate, as we've seen it, we still have 23 and a half minutes left
Right.
until. That's just something to keep in mind. Now,
it is.
You could have done the same thing, right? Let's say it was just oscillating around at like 301.
Yes.
Then maybe you think it has a greater chance of, maybe this is too big of a move, which I think it is right now,
Yeah.
right? To really get a spin back over the 305 level
Right.
prior to 11 o'clock.
Right.
But I'm talking about maybe you only got like a small move and you were like, okay, you know what? Maybe it doesn't have the juice to go downside. And then what you do is you say, I'm just going to take the downside off right now.
Right.
And then you have this position up here if it goes back up,
Right.
which can be good if you just don't think it has a conviction on the first move. You take off that side and you just leave open the other side.
And then, of course, what ends up happening too, folks, is that what you have to take into consideration is that when you close it and the market's still open, you're losing a few ticks because you have to go on the offer to buy it back. Meaning, except
Yeah. That can be changed sometimes, though, in the risk reward, though, because sometimes there'll be premium here actually.
Yeah,
Right.
no,
Just
that's
to
right.
put it where, and
That's
that'll
right.
give it to you back. So sometimes you might even be getting a better price than the market.
Right now, it wouldn't be though.
Right.
Right. But guess what? That's going back up to $3.
Yeah, and just to put it realistically,
Yeah.
you're talking about. I mean, look at where this is at $3 basically on the dot.
Yeah.
And all it's doing is oscillating 3 ticks away on either side.
Right.
So it's not a
It's pretty
substantial
good.
amount at
Right.
all. Yeah. It's basically, yeah. But that way you know all your options, because that's why people should be trying the demo, getting used to it, because it's not easy on the fly if you haven't seen how they react to say, oh man, maybe I should have taken off the short side if I'm trading 2 legs,
No, definitely.
and because it didn't move that far, whereas now you're 6 pennies away from where you'd have any value to the upside. So you say, okay, I'm not thinking I can have value to the upside, so I'm just going to stay with the short side.
Right.
Yeah.
No doubt. Let's go take a look at the SPY and the S&P. I mean, in the NASDAQ Composite. So the SPY, thus far, folks, it got down to 214.86 out here this morning. You're at 215.13, and you're going to see this trying to, build a little bit of cause and, spike up a little. So this, you get a nice tradable market here because with the parameters on both sides. Tom O'Brien, we want to hear from you folks. I know our phone number is 877-927-6648. Come right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 81. You get the Nasdaq off 22. S&Ps are off 5.5. And bottom line is that you get a market that is just bouncing off these numbers like left and right, which is really wild, man.
Even natural gas is still bouncing around. We'll see where we end up. Definitely a little bounce from where we were. You still have profit at this level, which is nice, though, to keep that in consideration. You know, I mean, that's what you really like about these trades. You're not looking for the huge home run to make a killing. You know, you can still have that because you're only risking $38. And if just one of them gets full value, you have 150. So you still have the opportunity for multiple profit on your risk, but you're just not going to be losing your entire investment very often, which is nice.
Well,
I know you know what I'm talking about, right?
Yeah,
I mean, I'm just expressing it because I think that's what people would like. You know, that's what I like. That's what you like about this. It's like, hold on, man. I have such low defined risk, $35 just in the contracts themselves. You know, and we're adding even the dollar each side commission, all of it, completely all in. $38 is all you need to make back for your two-leg position. Huge. It's a sweet deal.
Let's go look at the Twitter, TWTR. So this
one really surprises me, man. You know,
so,
I wasn't going to trade it, but I said to myself, I really think even at the level it was at, that it was going to go higher. Just thinking, you know, one of those things where just thinking that, man, this is something I thought I could see companies saying, you know what, there's not going to be another Twitter for sale next year. But guess what? They don't think like that, I think, because they just innovate so much, you know, that they are saying, guess what, there might be another Snapchat next year, you know. Facebook just introduced their messaging. They have now, I saw something, private messaging, where it can do the same thing as Snapchat. It can just it gets erased or disappears.
I see.
I mean, it's just, but go ahead, yeah.
So Twitter, folks, you know, if we go back to September 22nd.
All the way back to September 22nd.
Yeah.
I know.
It was at $18.
2 weeks. It was less than 2 weeks.
$18.44.
Yeah.
David Favor come out from CNBC and said that someone's looking at it. And so I want to see what the story is today. A report saying Google won't make a bid. Twitter fell the most in the year following a report that Alphabet's Google isn't interested in buying the social network.
They were reported to be on almost the lead, or I don't know if that was news or just speculation, but I saw articles saying Google is going to be the best bidder for this.
Yeah.
So.
And then you had Walt Disney out there. You have Salesforce out there. As you know, these are all the rumors that are out there. Technology news website Recode reported Wednesday that Google doesn't currently plan to make a bid for Twitter, citing unidentified people familiar with the situation. Walt Disney and Apple are also unlikely to be sued, as Recode said. It's pretty amazing that, so one site is the one that croaked this thing. Now, what would be really cool, folks, is this. So Twitter's down $4.63, and I would love to see this thing fill the gap. The gap is $18.92. You know, because this is going to be one of these situations that this is still going to be in play. You know,
I believe that. I do.
And what you could do,
like, you know, Kevin was talking about it yesterday, just in our short segment. I mean, somebody really brilliant out there with the resources and the company behind them has to be imagining. You know, if you had those resources and you were a technology company right now and you had potentially billions to make an acquisition, just like, you know, you hear Warren Buffett, right? There's not going to be another Coca-Cola. There's not going to be another whatever. It'd be really hard to create a platform that the entire world decides to use for instantaneous news again. So
and what also happens is that you're Google, right? You know, you want to buy them. You know that it's just got bid up. You have all the money, right? And you all the time. Like, you probably, no, I don't want to buy them. Right.
Yeah,
you wake up.
I'm really surprised that it's not even a bidding war, though. But that speaks to it. Where if they're all playing that game, geez, I don't know. Maybe it's not a bidding war then, because guess what? It doesn't work like if everybody says that, because maybe there's some truth to that at least. If everybody's saying that, because everybody's probably not bluffing that they're not interested. So how many are interested? Just if it was a hotcake deal, nobody would be bluffing. That's really my point. You know, if it was that big of a commodity, right? It's almost too valuable to play that bluff game. That's all. You've seen the things where, like, Instagram gets snapped up almost like instantly.
Right.
You know, like those types of commodities on the market where you don't think you can compete with it by creating another one instantly, and they have the kind of their own place. They've gotten snatched up pretty quickly by the Facebooks of the world, the Amazons.
Right. There's no doubt.
So I'm just really surprised that hasn't happened. Like,
yeah. And I guess it's going to be because of the market cap, right? That it's so large that you know.
Yeah, right. It's. I mean, what is? Yeah, what is?
So if we take a look at the market cap,
14 billion.
14 billion.
Right.
14 billion and
Revenue.
yeah,
I don't know. Yeah.
2.6 billion.
Right.
That's pretty intense.
And it's only 2.8 next year.
Yeah.
Right.
So you're talking.
But you know, it that can change so quick, right?
Yeah, it
Though
can.
think about it. I mean, if Google buys them, it's like boom, Google ads are now instantly all over Twitter, maybe.
Right.
And that the person that buys them might not even make revenue directly off them. They might then take that data and import, you know, in Salesforce. There's just a million ways when you have that type of
there is.
connectivity to a user base.
There definitely is, and you know, as we were saying yesterday, it is the news source, man. I mean, it is the news source, and we're going to see that in this hurricane coming across.
Oh, it's. I mean, we see it. Yeah, in the world. You know, it's really remarkable when you talk about in the world where there's not really news.
Right.
The avenue of news and information it provides.
Yeah.
It is, but you know, just in my head jumped in. That doesn't mean that it's a profitable business. Because guess what? Guess what? I was just going to go. Guess what? One of the coolest places on the internet is Wikipedia.
Yeah. Right.
And guess why it's so great? Because they really don't have this for-profit model, and you just go there, and you don't have pop-up ads, and you just have information. And that's a little bit what Twitter almost is, right? I mean, you're not going to go interact with all these ads. You just want to like share a tweet, see information, go on there, follow people. So that's the tough part that probably people really brilliant are examining as well and saying, man, you know, are we going to be able to recoup $15+ billion from this company if we buy it? Only a few people can be interested in a company that big, and so they all can't be bluffing at the same time. That's not how bluffing works, man. You know, I know you know that.
No.
They all can't be bluffing at the same time.
No doubt.
Yeah.
Let's go take a look at that silver market. SIZ. So silver. There we go. We hit it. This is so weird when this happens, man. This is crazy. So 1725. That's the number. There's the number. This is crazy. So the number that we're talking about, folks, that you know, the Brexit Day all over these markets. It's just a benchmark.
We got 5 1,000ths of a point to go.
Isn't it crazy? Is it?
I know.
No, it's just.
It's literally 1725 on the dot, and we only got the 1725.5.
I know.
Tell it to do a little bit. Oh no, did we just get? No, we didn't. We're a few pennies.
The thing that's so wild about that, you know, over the course of years, it's like, man, how does this work? But
it's definitely going to cross that level at some point if it goes down. So just to put it in perspective.
But my point is that I'm expecting to get a rejection here. So we'll see. That's, you know, when it was up there, I was looking for it to go down there.
Oh, yeah.
Just because what happens is that these strengths, that's what they like to do. So the real key is going to be, does it hold or not?
The remarkable part will come then if it does reject it, right? Otherwise, it's just passing that point. That's all.
Yes.
Yeah.
No doubt.
Yeah.
You stay right there, folks. Tommy and I are coming right back. Natural gas right now is at $2.98. That's not bad. 10 minutes left.
Yeah, you got 9 minutes, man, and you got more than $60 in equity in that position right now.
Not bad.
Yeah.
Dow right now is down 86. Nasdaq's off 20. S&Ps are off 6. We're going to be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's go to our man Carlos in California. Hey, Carlos, what's going on?
Hey, how you doing, guys?
Doing
Morning,
great, man.
Carlos.
Yourself?
Oh, I'm doing all right, Tom. I just remember those shorts I had?
Yeah.
I covered them too early. I missed the whole move. Yeah, I remember you told me to hold them, but there was a point where I had to cover them, and I said, well, unfortunately, the huge move on the metals, and this time I lost it. I miss it.
Okay.
But I'm trying to play the platinum.
Okay.
Platinum this morning.
Yeah.
And I'm not in the green yet because it keeps dropping a little bit, but it's not far from my entry. And can you help me with the?
Now, are you trading the January 17 one? Is that the one we're trading?
Futures?
It's actually. Let me see here. Yes, it's 17.
970.
January
Okay.
17.
970. Okay.
Yes.
Listen. I'm trading gold right now. Now the bounce is not working, but I kind of like it here. So platinum. I think for the trade, yeah, you can trade it. What you're going to want to see before. I'm sorry. Go ahead.
Yes. Before you proceed, can I ask you what is the Brexit low?
Yeah, let me pull this up on platinum.
That's my first question.
Yeah.
And the second one is at this point platinum behaving better than the other two metals, gold and silver, based on the percentages that they have dropped as far as today?
So on the platinum, it's going to be different in different contracts. This is 981. And you're at 970.
Yeah, and the day before that, even really the day before that,
Yeah.
the low says 970, almost on the dot, 970.40.
Yeah.
And then 617, same thing, about 970.20, and that's on this contract. But I tell you, enter PLAT. We can pull up the spot real quick. Just stay there. Where was spot?
Thanks.
Is that?
One
No,
above
that's
it,
per
right there.
ounce.
Platinum spot.
Yeah.
So 965.
Go ahead.
If we pull this back, there it is right there. It's sticking out. Right? Yep. That's
956.40.
Okay, and with
Now that's going on, so, like that contract. The spot right now is only showing it's trading at
965.
965. So,
Yeah, the low.
which is like $5 below it. So then if you raise, where the low was there, you're looking at like even 961, 962 if you're trying to compare them. So anywhere from 960 to 970, depending on how you look at it.
What you want to keep your eye on, Carlos, is that
Yes.
if the dollar does not, if it stays over these highs, then any of those metal trades are dangerous, being long. Because the dollar wants to get up to this 97.61. Let me just go to the yen for a second. Yeah, see, the yen is testing at 104.32. We hit 104. That might stop dead in its tracks right there. Just keep your eye on the dollar. If the dollar stays over that level as you're coming into like 1:30 this afternoon, then and I wouldn't be long. That's
Okay.
Yeah.
And now, let me ask you, this is a question related to the, do you have that feeling when you sell too early that you didn't proceed correctly? Or have you ever, I feel like guilt.
Well, it's a tough scene because you know how tough it is to hold on to positions. And then when you do get a move like that, all that work that you did for the last 6 months, you feel like, oh, man, I don't believe it. It's part of it, man. It's part of it.
Hearing that you were predicting it, and
I know. It's part of it. It's sad but true.
Thank you,
man.
Tom.
Thanks,
you, Tom.
Carlos.
Have a nice day,
Have a
guys.
great one, man. Have a safe one. You stay right there, folks. Basil Chapman's coming up next. Then, of course, swim lessons. Have a great one. Have a safe one.
Thanks, man.
pal. Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.